For now, we're heading toward this gap and the liquidity above it. So hey guys, what's up? So in the last video, I told you that we're moving up to cover the zone, the gap that was right here on the CME. As a result, we're slowly recovering, and we've almost filled it already. There's just a little bit left to completely close this gap. It's at 84,000, so most likely we'll see another top form here. And after that, we'll start heading down. For now, this is how the situation's shaping up here. If we look at the daily time frame, we can see we're in the overbought zone. And right now, we're in the 68 zone. The maximum overbought zone starts at 70. So we need a couple more percent to reach that zone. And we could still go a little higher. Above these zones, Bitcoin starts to unload, so we can see that when we hit the overbought level, there's a correction, and at certain points, Bitcoin starts to correct sharply and heads down. At the same time, we know that there's also very strong resistance here. This is right around the 84 area. We've established strong resistance here, thanks to these moves. These are the moves we saw in November 2025 and in December. So resistance formed at the 0.38 Fibonacci zone. The level is 83,772. So what this means is we might see a breakout above the zone, but in the end, we should see a correction from it because here we'll clearly close that gap, which is at 84,000. That's why we need to wait for this recovery before we can talk about further decline. As for Ethereum, we also see a gap in the 2600 zone, which Ethereum should also reach and accordingly close that gap. But in terms of dominance, Ethereum is weakening, and there's an outflow of liquidity from Ethereum. This means that some new levels, it will be much harder for Ethereum to break through them than for Bitcoin. Because at this moment, there's an influence of Bitcoin. And most likely, it's coming out of Ethereum. Bitcoin will be able to reach these zones, but Ethereum most likely will not. Here, of course, we need to measure its movement using Fibonacci. Check those same levels, see which levels it's currently at. And you can see that Ethereum is in the 0.38 zone. This is strong resistance for Ethereum, and that's why there are doubts that Ethereum will be able to close this gap. So if Bitcoin is the first to close this gap and starts moving down, then Ethereum won't close this gap anymore because it's already near a strong resistance zone. And as I showed you in the previous video, Ethereum still needs to correct even lower, down to the 1400 zone. That's why you need to keep an eye on the 2388 level. Watch it, because if Bitcoin closes this gap and starts correcting, then Ethereum will start moving after Bitcoin, since Bitcoin is much stronger in this regard. I also showed you with gold that strong overbought conditions will definitely turn into a strong downward move for gold. So it's just a matter of time. Right now, there's some recovery, but it's not significant. So you need to wait for more serious moves here. For now, this level, also a gold level marked on my indicator, serves as support for Bitcoin. It's acting as support, and you definitely need to watch the 74 level. That's the 0.61 Fibonacci level, 74,800. This is a very important level. If it breaks, Bitcoin will drop sharply. At the moment, I see that there's still liquidity around the 85,000 level in this zone. There might be some kind of spike to gather more liquidity, and only after that will the decline begin. But it's definitely going to happen because there's liquidity here. And because of the current formation that's happening right now, And accordingly, as the price moves down, more short liquidity is also already present above at 82,000. So this is just the first move, the first impulse. There should be a second one after that, because to really talk about a correction, there always has to be a retest of a level. So if we reach a level and test it once, we need to test it a second time. For example, that's what happened here. Once, twice. And that's always the case. We always test a level twice. And we create these kinds of signals. This is my indicator. It shows signals for corrections and signals for growth. I use it as a key reference, and it really helps me in my work. For example, here's a bullish signal is showed right here, thanks to which I closed my short position. So guys, I'm still waiting. A move to 84,000 is possible, maybe even a spike to 85,000. But from there, I'll be watching for a move down. I still need one more retest of this level, and it's necessary to fully close the gap on the SMA. After that, we'll move on. We're collecting these gaps that formed here earlier. So we'll be watching this in the second half of the month. That's all from me. I wish you profits, good luck, and a great mood.